Optimism is there. Record highs for global stocks, but you're going to pour some cold water on this.
Yeah, absolutely, Tom. I don't like it. The price action, given that we're at record highs, the price action really is quite disappointing. Look, we talked yesterday how I was turning a little bit more grumpy with this kind of stock market. And now I'm kind of progressing to outright bearish 24 hours later. This is in the context that, as we've talked about for the last year or so, Tom, that, I believe in the AI bubble, that we're still in the inflationary stage. My narrative recently is it's going to be to at least the next earnings season, and I'm not even just calling it then. But you know what? I'm no longer convinced we get to the next earnings season. I feel that the disconnect between the AI bubble and how narrowly focused it is and the increasing pain in the broader economy is just getting too large. Now, up until the last 24 hours, my narrative was, we'll get a temporary pullback and we'll be back on the AI bubble. But now that we're getting the economic damage worse as the AI bubble continues to get frothier and frothier, I feel like it might start kind of its own self-feeding negative spiral at some point. So, yeah, since yesterday where I was getting grumpy, today I'm turning outright kind of negative on this stock market. I think the economic damage is quite large. Of course, if we get an Iran deal, we're going to get one pop, but I think that'll be a final pop. If we don't get that Iran deal, well, then we won't even get that pop.
Goodness. Okay, so grumpy yesterday and outright bearish today. Let me just ask you about the impact a potential deal could have on this market. I mean, if we stay in this sort of status quo where there's no actual breakthrough, are equity markets, which have been pulled up by so many of these AI and semiconductor stocks, going to start to pay attention?
Yeah, I think they will. I think that's the point. I think we're getting to the point where if we stay in the status quo, the economic damage is going to start dragging down even these AI frothy names. It just said they're the only ones left who are just kind of ignoring what's happening. And they can't boom when there's wealth destruction in the economy out there. What do we get? If we get a headline, we will get one more pop in stocks that will last a little bit of period of time. But that deal is mostly priced. We're priced very optimistically. And that's why I think that, there's three scenarios. We get a deal headline, brilliant. We get one final pop. We get status quo, well, it's increasingly damaging and stocks will fall. And we get a deal collapse and military escalation again, well, then it'll be very bad in the short term. So either way, I just think suddenly, it's gone from being fine, the AI bubble last week, to this week going, nah, it's not fine.
Central banks hold back on rate hikes, maybe, given the economic damage, Mark. Could that be some relief?
I think so, but that'll come delayed. And ultimately, I think the inflation problem is quite bad. And this is why it's going to be bad for stocks. It's going to be a stagflationary environment. We've got a real stagflationary impulse from the war. The only thing we're debating is how bad it is, whether it's very, very minor or whether it's substantial. I think it's going to be slightly more than priced, at least.